guys, Adriana Otero here. Hope you guys are doing well. So today guys, we're going to talk about how the interest rate hike has really affected your buying power as a buyer, and by default, how that's affecting sellers and why the price on the market, days on the market have drastically increased. So first we're going to start by, I'm going to tell you a little bit what we're going to do. So for starters, we're going to base all my amounts on a $350,000 purchase price with a 5% down payment and a conventional loan. Now, I just use that as an average estimate. Your situation could be more or less. This is just to kind of give you an idea. So biggest thing that's affected us, of course, is interest rates, right? Now, why is that? Because in March, the interest rate was 3.76. And that resulted in a payment with your mortgage, insurance, your principal, and your interest being about $1,807. Now, fast forward to June, that interest rate went up to 5.78%, which that, for the same $350,000 home, is going to cost you $2,212. Now, that's a pretty big difference. Now, so you don't have to do the math. I did the math for you. The difference is about $405 more. So I don't know about you, but most employers are probably not rushing to give their employees a raise because the interest rates went up. They're trying to buy a house, right? So what does that mean for you as far as purchase price? Well, on average, every $1,000 in purchase price averages out to about $7 more about $7 a month that you're paying. So when you figure that you're now paying $405 more a month, that's quite a bit, right? So how much less house are you actually able to afford with that same house? So that averages out to you actually being able to afford, instead of $350,000, that's going to go down quite a bit to where you, if you want to keep your same payment of $1,807, you would only be able to afford about $286,000. That's a big jump. It puts you in a completely different bracket. And that's, again, with a conventional loan at putting 5% down. So let's say you wanted to try to get a better job to try to still qualify for the same $350. How much more would you have to make an hour? So the average person that works maybe a 40-hour week full-time job, that would be 160 hours. And you would have to increase your monthly income by $405 a month. So how much would that translate into per hour? That would be about $2.53 more that you would have to make an hourly wage to still be able to qualify for the same house at the new higher interest rate of 5.78 with the higher principal, interest, and mortgage insurance premium of $2,212. But if you don't want your payment to go up and you are still only comfortable at that $1,807 a month, because let's say your employer didn't give you a $2.53 raise so you could afford your house, then you're really only going to be able to qualify for $286,000. That, guys, in a nutshell, is the biggest reason why we are having such a slowdown in our local market. That's what's affecting especially our houses that are in those higher price ranges, because the people that could afford them payment-wise cannot afford them anymore because they don't have enough room in their debt to income ratios. They don't make as much to qualify for that. And of course, most employers are not going to be willing to give you a $2.53 increase in pay just because of that. So that's why we're seeing a lot more houses go on the market. That's why we're seeing a lot of houses start to have price reductions and houses that are sitting for 2-3 weeks or 4 weeks or more. So again, in a spiel, that's a little bit of information on how that is actually affecting both buyers and sellers, and buyers in particular, their buying power in today's market. If you have more specific questions relating to your situation, please reach out to your lender. If you are still interested in buying a house, there are still lots of houses out there, and with today's market, that may be a great idea if you still are qualified and you have a little bit of room in there, now is a great time to be able to try to at least negotiate a little bit on some of those prices, because there is inventory, but there's a lot less buyers out there because some of them, as I said, got bumped down to the lower price range. So that is a benefit for you buyers. So definitely give me a call if you are interested in buying a house. If you're a seller and you're interested in selling, there are still times. You just have to know how to price your home correctly and market it properly and make those adjustments in price as far as being able to still reach good amount of buyers. Give me a call if you have any questions or you would like my help. 970-370-0135. Thanks for watching, guys. Hope you learned something, and talk to you soon.